Hello, this is Matt on the Moon Lambo channel. I'm noticing some of the most popular crypto chart analysts out there who don't frequently talk about XRP are now talking about XRP, and they're charting it. A case in point, here's a headline from the Daily Hodl, which reads in part, "Top analyst predicts breakout rally for XRP." But really, can you blame more and more analysts for taking note as XRP has been performing spectacularly recently? And there are so many analysts out there who, for their own individual reasons, their own individual analysis, are anticipating, even in the short term, some burst to the upside. But look, it just happens to be the case that if you wait long enough, at least historically speaking, XRP is just going to melt some faces. It just comes when it comes, even if it takes years and years and years. It just eventually comes. And then there was the news that broke today with the FOMC, and fantastic, although I think that there are a lot of people misreading some of what the latest information means, so we'll kind of run through some of that. But suffice it to say, crypto market's looking great today. Bitcoin for the last few hours or so has been staying above $35,000 pretty safely, so we'll see how it goes as more time passes, but market responding quite favorably to what has unfolded today. But before going further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. As I record this video, XRP is at 61 cents, and you've got Bitcoin leading the way higher at $35,504. You got the Crypto Fear and Greed Index at 72 out of 100. So market participants, those lovable, cuddly little retail lemmings out there, they're feeling greedy. Oh, you greedy sons of bitches. But hey, you know what? I prefer to see that than knowing that they're in agony and in fear, having trouble sleeping at night. Those poor little things. But here they are. They're in greed. And so it doesn't literally mean the moment that we flip from, fear or neutral to greed that it's time to start panicking, or anything like that, or time to start selling. The market can maintain in greed mode for some time before it actually hits a top, but it's just more of a general concept. The old Warren Buffett saying, "Be fearful when others are greedy, and greedy when others are fearful." The concept's true. It doesn't mean the first moment you see that it's time to flip. So let's talk a little bit about this again from the Daily Huddle. Top analyst predicts breakout rally for XRP, and they're covering an analyst here that I've been following for a number of years, but I don't highlight him that much. And nothing against him at all. He just happens to not generally be talking about XRP. Piece reads as follows. A crypto strategist who accurately called the top of Bitcoin's 2021 bull market is expecting another leg up for XRP. Pseudonymous analyst Pentoshi tells his 706,900 followers on the social media platform X that XRP looks bullish after taking out a key resistance at 54 cents. And he said, XRP fans, a breakout above 54 cents should lead to 62 to 63 cents. And I'll note that he was stating that about a week ago, actually, maybe like October 23rd or somewhere thereabouts. I'm just noting, accurately cited by the article here, that's about where we've landed. We haven't seen 63 cents yet. And maybe XRP could have on certain platforms hit roughly 62 cents. But yeah, we're pretty much up there right now. That is what indeed has happened here. And he's not the only one. In fact, I mentioned this yesterday, but it's worth repeating. One of my favorite analysts out there, Credible Crypto, 349,000 followers now. He says if we break that level of, I think he said 67 cents, if we're able to push through that, because it is resistance, expect a quick burst, relatively speaking, up to 90 cents, because there's just not that much resistance in between. So there's a lot of fun time to be had ahead of us, and for so many reasons. And still, look, happy to see Bitcoin leading the way, which is absolutely what's happening. That's how it's always been. Maybe it won't always be like that, but it's always been like that, and it will be for the indefinite future. I embrace it. And so here's Credible Crypto. He had this post where he was talking about the price action of Bitcoin and the expectation of bears out there who are thinking that are just going to keep cratering on down. And a lot of them have been left stranded on the sideline to this point. But here's what Credible Crypto posted just a couple hours ago. First, they were waiting for $12,000. Then they were waiting for $20,000. Then they were waiting for $25,000. Now they are waiting for $30,000. Soon they will be waiting for $40,000. And so like he thinks Bitcoin is going to be hitting $40,000 sooner than later. And he's just noting that while a lot of people were crying, hey, when we were at $15,000 to $16,000 in late last year, hey, Bitcoin, it's going down to $12,000. There was no shortage. That was a popular opinion, in fact. You know, you're a contrarian if you said anything to the positive. You say something positive, get the hell out of here. But Credible Crypto said, well, no, he's been consistent. That was the bottom. And if you think that we're going to hit 12K, you are sorely mistaken. And he still insists that what is most probable, though not certain, is that this year, Bitcoin will be hitting a new all-time high. Now, look, I don't know if that's going to happen. I don't pretend to know, and I don't make price predictions. But you got to admit, that sounds a whole lot less crazy than a lot of people were making it out to be in January. Don't you think? So good on Credible Crypto for certainly being correct directionally, and we'll see what happens. And part of that could, you know, come down to when's a spot Bitcoin ETF getting approved or not. But then there's also this from XRP chart analyst Harry at Geraldo XRP. I would argue most famously known within our community for calling the biggest bull run in XRP history in the middle of December 2017. Calling the beginning of it. I mean, he put out a post and it did start going. Then he called the top, and that was the top. And so he wrote here, because he's expecting Bitcoin to go even higher, he said, Bitcoin looking like a move to $42,500. I'll tell you what, I know what I hate, and I don't hate that. So let's see if it happens here, but directionally, it does seem like this is where we're going. Then there was also perspective from chart analyst Rakesh Upadhyay, and I don't feel like reading through this. You know, I try to give as little of the actual technical analysis as possible, because I think most people are like me, and your eyes glaze over when you hear all the specifics, because the vast majority of people in crypto, including our XRP community, are not technical analysis, and they don't want to be. So I'm with you guys. So, but his perspective, it's on your screen right here, and he's just noting that if the bulls have their way, you know, we're going to be seeing them, as he wrote here, build upon the advantage, you know, if they get their way, and push the price to 67 cents. Now, again, that's the level that Credible Crypto is talking about. So if it does hit that, which he thinks is resistance, get ready for it to blaze on up to 90 cents. And then there's this. So what happened today? This is interesting stuff here from Cointelegraph. Bitcoin beyond $35,000 for Christmas, question mark, which is why my voice goes up like this with this inflection. Thank Jerome Powell if it happens. Historically, a Santa rally happens in the weeks leading up to Christmas when a collective sense of goodwill bleeds into equity markets. This is typically a seasonal blip and nothing to write home about. But this year, we could see a far more significant rally as the United States Federal Reserve, the Securities and Exchange Commission, and BlackRock line up to deliver a bonanza of holiday cheer. The Federal Open Market Committee, or FOMC for short, finished its penultimate meeting of 2023 on Wednesday, and it decided to hold interest rates steady. As we know, U.S. inflation has been tamed from a high of 9.1% in June 2022 to its current level of 3.7%, thanks to the Fed's aggressive interest rate hiking cycle that brought the federal funds rate to 5.25% to 5.5%, its highest level since 2001. So I gotta pause there to have a few lulls about that. First of all, they talk about taming inflation down to 3.7%. Bitch, what you talking about? That's about double what it should be. It should be closer to 2%. It's almost 100% higher than we would like it to be. So fine, yes, it's less horrendous than 9.1%, but it's still pretty damn bad. And you know what's more hilarious than that? It's that they're giving the Fed credit here. The Fed caused the damn problem. They debased the dollar, printed it into oblivion to the tune of trillions of dollars. And then here, oh, but that Fed, they've been doing a great job here. They got the disaster they created down to 3.7%. Are you kidding me? What are you talking about? The federal, they created this disastrous problem. They haven't fixed it, and oh wow, well they're really taming that thing. They're really taming that. Can you believe the narrative? The cojones on this one, jeez. You gotta admit it's pretty funny, right? This is ridiculous. Sometimes all you can do is laugh. I mean, I know it's completely financially devastating to many, but hey, you know, silver lining. Kind of laughing because it's just absurd. Peace continues though. Let's talk about this. However, while this campaign has been unquestionably successful, markets remain deeply concerned about the potential of higher rates, or even rates sustained at this level, to trigger a recession in the United States. The Fed also now shares these concerns as it softens to some degree against inflation. Should the next Bureau of Labor Statistics inflation reading on November 14th show a move downward, we can expect to see money flooding into risk assets as investors anticipate the next interest rate decision to be a cut. This will, of course, have a positive impact on equity markets and even bond markets as yields fall and the back end of the yield curve flattens. Okay, and so obviously, broadly speaking, markets responded quite favorably to the development today, although the future remains somewhat uncertain. Now, and it's so fascinating. Let me tell you something, and I'm sure many of you have heard this. I first heard it actually earlier this year from the blockchain backer. He was the first analyst I saw to point out this particularly interesting piece of data, which is that it's actually, it sounds kind of counterintuitive on the surface. You may recall that lots of people analyzing the markets have been looking forward to not just the Fed not just halting the increase of interest rates at their FOMC meetings, but ultimately pausing them, which we've seen, and then ultimately reducing them. Reducing those interest rates, as that would be a sign that, hey, things are under control, or everything good, everything good. That's what it would be perceived as. But historically, that's actually not been the case. And so again, to understand, when they're increasing interest rates, it's in an attempt to tamp down inflation, which is out of control, which they created that problem, printing just trillions of dollars, just runaway inflation, which is absolutely what happened. Duh. And then they act surprised when it happens. But anyway, so the point of increasing the interest rate was to slow things down, because if interest rates are higher, then whether you're operating a business or on a personal level, you're less likely to take loans for various things. And if you're less likely to take loans, then that's economic activity if you don't participate in taking the loan. Less economic activity slows things down, should ultimately slow inflation. That's the thing. And so you'd think, well, if we can just get back to where the interest rates are actually decreasing, the Fed's decreasing interest rates now, then that must be a really good thing, right? Except for the data shows that's not the case. The data shows that you should actually be concerned, if anything, when the Fed starts decreasing interest rates. And why is that indeed the case? Well, it's because when the Fed is doing that, it's effectively a sign that if they're doing that, they're recognizing that there's already cracks in the economy, effectively. If they're doing that to encourage more borrowing on the part of businesses and individuals like yourself, historically, again, since that's been a move to the downside, it's because it's been signs that they saw other metrics, whatever they were looking at, indicating we better do something here because the economy looks to be teetering right on the edge, right on the precipice of complete failure. Or not literally. That's a bit much, but you get what I'm saying. You get the cut of my jib. So historically, that's what that meant. And so the blockchain backer is the first individual I saw bring that up, but I've seen other analysts since then point that out, including Alessio Restani. I've been following more of his stuff lately, even though he doesn't always talk about crypto. I've been covering more of what he said recently because it's been fascinating what he's been stating about how he believes it looks like when it comes to equities, we're actually in a bear market here, but he's pointing out the same thing. When these rates actually start coming down, historically, that's an indicator that, the wheels are about to fall off this damn thing. And the thing for us here in crypto that is even more interesting beyond all of that is that historically, crypto asset class obviously has followed what happens in equity markets. So if the economy starts to teeter and it eventually falls over, economy's going down, and again, it doesn't mean that we necessarily have some sort of great recession like we did in 08 and 09. Though I'm not saying we would or wouldn't. I'm just noting that historically, recessions, should we get one, and equity markets, when you're talking about stocks going down, it doesn't mean that there's something horrendously disastrous, broadly speaking, like that. Usually they last for, I think, a little over a year, and you go down some percentage, and it's not going to destroy most people's lives, basically. But, the question is, since crypto historically has followed, is this a time where this is actually different? And chart analyst Alessio Restani, he thinks that one of the charts that he's looking at is lying. So he thinks that either We're going to see, equities markets snap back into place where you'd expect them. And he's looking at a couple different charts. And when he's considering that, not just like the S&P 500, for example, but he's looking at that. And so the anticipation is either that's going to snap back into place and start moving back up to the upside. And so it's just a blip on the radar, just a statistical outlier, or the Bitcoin chart is going to snap into place and start following the negative action that we've seen with equities. And so he thinks that we'll have an answer on that within the next couple of weeks in all likelihood. But still, you see this, and then there are all sorts of people acknowledging the disparity directionally between what's happening in equities and crypto and saying, hey, it's a decoupling. And I'm just sitting there like, you guys sure about that? Are you guys sure? Because I've heard that so many damn times for almost 6 years. It's 6 years now. I've almost 6 years I've been in crypto. It's certainly never been the case. And this is the moment where it actually finally is true. I mean, if so, okay, happy to accept that. I would like that, sure. But I'm not completely convinced just yet. I've heard this story too many times. So it just makes me wonder, and we'll see what happens here. But still, it just makes you wonder, though, because admittedly, there's so many good things news-wise that should be coming, and most of the time, whatever's happening in the news, I'm like, eh. But when you're talking about a spot Bitcoin ETF, the true impact of that over a prolonged period of time will be profound. Unquestionably, it will. If you just look at the raw data and the numbers that are projected to come in, even if they're off by a fair bit, it would still be a boatload of money flowing in. And yes, it's possible. You could see, and I'm not saying I'm convinced of this, but yes, you could see a quick rally to the upside and then a quick correction to the downside when we get news of a spot Bitcoin ETF getting approved, which seems like a virtual inevitability at this point, perhaps within the next couple months even. You could, but I'm not convinced that there's that much money that has jumped into crypto that is front-running this thing. Maybe some recently has, but we saw when Bitcoin was around $28,000 that fake news, and you guys remember that, right, a couple weeks ago? And Bitcoin briefly ran up quite quickly and then went back down as soon as it was found to be fake news. So that already proved that, at least up to that point, it doesn't seem to me like it's probable anyway that anybody was front-running that. I mean, in theory, maybe, but I don't find that particularly compelling. But maybe there have been more people, especially as Bitcoin has now gone up, over $7,000 since that point, and it's sustaining these levels. Well, maybe a lot of those people actually are. So I don't pretend to have the answer, but I will say this: even if you see a move to the downside after the news breaks, so what? All that would mean is that people got exuberant. The news broke. It doesn't mean that just because there's this approval that all of the big firms out there have everything in place so that all of their clients can start buying. Even if they could start buying, it doesn't mean that they all jump in day one. It's not like that rush of liquidity literally jumps in. So there could be some exuberance. I do acknowledge that. To what degree? Nobody knows for sure. But the reason I wanted to mention this is because even if that's the case, you still will see money begin flowing in the coming months after that. Yeah, that's going to be real money, and that's going to, in a very real way, impact the supply and demand dynamics of Bitcoin specifically, which impacts the entire crypto market. It moves in tandem. This is going to be great for everything. So I don't know about you folks, but I'm looking forward to this. Regardless of what happens here, I couldn't be more thrilled. And even if we got an action, what's a disaster scenario here? So we have a recession and equities tank and even crypto. So say crypto goes down with it, even if, name your disaster scenario. Historically, these things don't last that long, and it's still the opportunity of a lifetime to be investing, because where are you going to put your money anyway? Everything's tanking. I mean, yeah, there should always be a bull market somewhere. Good luck figuring out exactly what that means, which is why for me, since I know that crypto, I firmly believe in a way, crypto is going to continue to offer the greatest multiplier effect as time passes. Yeah, I'm going to ride that thing out through a recession, even if that's what happens. That's going to scare me in the least. Because I'll keep earning money, and then if anything, I'll just buy more stuff. I got to put my money somewhere anyway, right? Dollar cost average in, I don't care. I'm here for the long haul. I play the long game when it comes to this stuff. Lots to look forward to here. And friendly reminder, I don't know if you'd heard, but XRP is legal clarity now, so that bitch going to run. Okay, when this market gets heated up, XRP going to run. I'm not a financial advisor. You should not buy or sell anything because of anything I say are right. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.